Hello, good morning. My name is Alexander, and this is my catch up series. So, today I'll be talking on GBP USD. I have a short position running on GBP USD, and I expect it to continue running down. But let's see my thought process on why I took the short position. So, let's begin. I'll go ahead and delete some of these so we can have a clear chart. Okay, so coming into this week, this week started from this candle. In fact, let me look at it. Yeah, on the 1st of February, that's when the week started. So the week started with this candle here, from this candle here. Okay, so coming into this week, all I saw was some type of consolidation on GU. It has been in a consolidation for a while, but all I could see was the market giving higher low, higher low, higher low, higher low. But on the overall scale, I was looking at the market going short, and this was the opportunity I had for that short position. Don't forget, all I saw was higher low, higher low, higher low. And this was some type of momentum, some type of bearish momentum that shows sellers present. So you could see that there was some type of breaking structure over here. So one, two, three candles being a bearish candle. You can forego this one and call it, since this is a doji, you can say one, two candlesticks in the same direction after breaking a support or resistance tells a breaking structure. So going on lower time frame, it's clear to see that there was some type of break in structure. If you look at it from this perspective, all you see is higher low, higher low, higher low. We have some type of higher low. This is some type of higher high, higher than this one. So we are in a bullish market. We have a lower high, but higher low, some type of normal high, higher low, and another type of high. So based off of structure, this is what I'm talking about. The market is still bullish as long as it's still giving higher lows. So even if it's giving lower highs, as long as it's still giving higher lows, the market is still good for a bullish move. But the moment we have something like this, the most recent higher low is broken, then we can say structure is broken. Then we have a retest for a continuation to the downside. So that's what I'm talking about. So we see that breaking structure here after the most recent high is not taken out. But all we see is some type of, we have higher low here, higher high, higher low, lower high, higher low, regular high, higher low, regular high. Now we see a break of the most recent higher low. What we expect is a retest for a continuation to the downside. Let's continue. So I saw the break in structure. Then at the site of a support, you can I pulled out my Fibonacci, and at the site of a support, pulled out my Fibonacci to test for retracements, and you can see that the market retraced to 38.2, had some type of bearish bullish momentum up here. If you draw this trend line, we see some type of bullish momentum. How? We see a higher low here of structure. Everything is structure. We see some type of lower high, double bottom, higher high, meaning bullish presence. Even in a retracement, you can see structure. We have higher low, have higher high. Okay, so now how do we take advantage of the sell that the sell has started to has continued? Okay, we want to see some type of breaking structure also. Simple. And you can see that breaking structure here. And after that, the first break, this is that bearish momentum in this market. You can go ahead to take your first position. Since the sellers are in the market, your stop loss is above structure. This is 15 pips. 15. This is 15 pips. 15 plus 7, that's 22 pips. And your final target is at your final target is the H4 structure here, because here I'm having some type of demand zone. I expect the market to run into that level. Okay, final target H4 demand zone, but since the market is stuck in a consolidation, a TP1 would be here, would be at this level, this lower time frame demand zone. So let's go ahead and see how the market fared. So we can see that the market after this, it took one candle, you were in drawdown in one candlestick. You had a 8 pip drawdown in that candlestick, and voila, the market went 52 pips. If you have 52 pips a day, you can call it a day. Like the saying goes, 50 pips a day keeps the 9 to 5 away. If you have 50 pips, at 50 pips, you could have liquidated your short position and call that a day. So we see that the market broke structure. Remember, market broke structure has not given you a lower high for a confirmation that the market is going to sell. But this is the first push phase of that breaking structure. So you capitalized on it. Immediately you saw this type of bullish momentum showing some type of bullish presence. You can liquidate your position. 50 pips is good. You had a 22 pip SL for a 50 pip TP1. That's 1:2. 1:2 is the minimum you should take. So you've taken 50 pips off that market, and you are 50 pips up for the week. Now that market has moved. You can see this initial Fibonacci position has gotten to 20 minus 27.0. You can do away with that Fibonacci, and at the site of support, you can pull out another Fibonacci. and drag it like this and see where the market wants to get to. Okay, looking at this market from this Fibonacci perspective, you can see that the market went back to 61.8, but as it's going up, you can see some type of structure also, and this is where that structure broke again to the downside. Remember, you are still bearish. You see the market break to the downside based off of structure. Boom. Okay. Now you might want to enter this, but it's not advisable based off of this seller's exhaustion that you can see off this candlesticks. So you'd want to see some type of lower high before you enter. So that lower high was achieved here. That lower high was achieved here after this with a bearish engulfing. That is another position for a new day. As another position for a new day. This is with your stop loss above structure. This is 18 pips. 18 plus 7, that's 25. That's 25. TP is still H4 based. Remember, you've already taken 50 pips. You are up 50 pips for the week, and your final target is still H4 demand zone. Boom. And let's see how that played out. You can see that the markets gave you profit, 16 pips profit, came back to your entry, went down, down, down. You can see a 40 pip. It now boils down to you. Since it is at a demand zone, you might want to liquidate. The market went bullish back to your entry, but now you can see that you are up 50, about 60 pips already from a 25 pip stop loss. And the market is still extremely bearish, still showing some type of bearish signs. And all I can see here is bearish momentum. All I can see here is bearish momentum. If we draw the trend line like this, we can see various touches to the trend line, confirming that we are bearish in this market. So the only way we can go bullish is if we see some type of breaking structure to the upside. So that is that for that. So as of now, we're still expecting the market to run into at least 1.35, 1.35, the 1.35 region, and 1.3550 is a psychological level. That is also another confirmation why I'm having my final take profit at this demand zone, this H4 demand zone. 1.3550 is a psychological level, and this week you can see that you have two positions running, 25 pips SL and a 22 pip SL. That sums up to about 47 pips stop loss for the week with a take profit potential of 110 pips and 103 pips. That sums up to about 213 pips profit off of a 47 pip stop loss. So that is a feasible and a good risk to reward ratio. So that is that for that. And that is the end of my catch up series. I would like to see what the market does since it has broken this demand level. I would like to see um, some type of bearish push continuation to the downside. If there isn't, I would only want to see some type of retracement. I would want to see some type of retracement. I'd want to see some type of retracement since this is the most recent higher low that has been taken out. I would like to see some type of retracement if it wants to give a reason, another reason for another entry into this market for those that have missed it. You would want to see the market give some type of lower high. Since we are bearish, you might want to see some type of lower high before you continue. So just take your entries off of structure. You are not meant to buy a higher high or a lower low, sell a lower low. All you do is buy a higher low and sell a lower high. It's as simple as that. If you can even do that, if you can identify that in the market, if you are in a bullish market, you're only going to be buying a higher low. You're only going to be buying these parts. You're only going to be buying these parts. If that is the only knowledge you have, you're going to make money. If you are in a bearish market, you're only selling this part. You're in a bearish market, you're only selling this part. You're going to be profitable on the long run. So you have to be patient about that. So that is the end of my catch-up series. So don't forget to like this video, subscribe to the Traders Hub YouTube channel. Also follow us on all platforms. So I'll go ahead and drop this there on Twitter. It is Traders Hub at Traders Hub NG. On Instagram, it is Traders Hub NG. Also, you can have Yusha Mindset, follow Yusha Mindset. You can follow me at Kingalxnda. On Twitter also, you can follow Yusha also on Twitter. You can follow Yusha on Twitter. Yusha Mindset. Yusha Mindset. And also me on Twitter at Kingalxnda. And our YouTube channel is Traders Hub NG. So make sure you like this, subscribe to it, and we'll be giving more values weekly, and we hope to help you guys. So take care and see you next week for my own session of the catch up. Take care. Bye bye.